Hi everyone, welcome back to Eagle Eye Stocks. Today we are diving deep into Tata Motors, one of India's most important automobile giant. A lot has happened in the last few weeks, from leadership changes to the major demerger to global acquisitions and even challenges like cyber attacks at JLR. So in this video I'll break down what's going on, what analysts are saying, and most importantly, what it could mean to Tata Motors stock price in the short and the long run. If you're watching Tata Motors share price from the past 1 year, stock has fallen drastically 30% around from 1000 rupees to below 700 rupees, whereas shares of companies like Maruti, Suzuki, Mahindra did not fall as much or close to 0%. In this video, we will see what are the recent news on Tata Motors and how it will impact the share price of this Tata Motors in the future. Let's find out whether the turnaround is possible or can the Tata Motors become multi-bagger stock again. If you like this video, please hit the like button and subscribe if you did not. Tata Motors has appointed Shailesh Chandra as the new managing director and CEO and the Deeman Gupta as the CFO. Leadership transition often bring new strategic focus and the market will be focusing closely to see how they execute, especially with the demerger around the corner. Demerger of passenger vehicle and commercial vehicle is the big news that we were waiting on. Passenger vehicle and the commercial vehicle business will now operate as separate entities. Why does this matter? Because it unlocks value. Investors will now get clear financial, better focus, and potentially re rating in the markets. GST benefits passed on to the customer with the price cuts. Tata Motors slashed price by 65,000 to 155,000 per vehicle depending on different segment. This is aggressive move can increase the demand, but of course it might pressure margin in the short term. JLR Tata Motors UK-based luxury car brand faced a cyber attack that disrupted operations. Thankfully, it's now recovering, but it highlights risk around IT and global supply chain. The 4.5 billion acquisition of Iveco's truck and bus business gives Tata Motors a strong European footprint. This can be a game changer if acquisition goes well. EV charging and expansion. Tata Motors plans to double charging stations in India to 400,000. That's massive, showing their long-term and EV focus. These are the recent news and highlights on Tata Motors. We'll see now what are the impacts on the share price. Now let's look at the positives that could push Tata Motors higher. Demerger offers structural clarity and value unlocking. Leadership renewal increases investors' confidence. Global expansion with Iveco enhances scale and technology in the European markets. EV charging network expansion strengthens the future of EV adoption in India. Analysts have upgraded the supporting valuation. Companies like HSBC have given the buy rating with the 840 rupees target, citing a long-term potential growth. And next, look at what are the risks and negative pressure that pushing the price down. It's not all rosy. Investors need to be aware of the risk as well. JLR margin pressures from discounts. Jaguar and Land Rover which is the premium luxury car maker under the Tata Motors faces significant margin pressure due to heavy discounting. In this luxury auto segment, discounts are often used to push sales when the demand slows. Inventory builds up or the competition increases, but each discount directly eats the company's per vehicle profitability. For example, if JLR sells vehicle at discount of 10%, that's not the reduction in revenue. It also squeezes the margin pressure because fixed cost remains the same, while contribution per car drops. Over this forces JLR to spend more to maintain market share while earning less on each vehicle. Additionally, luxury brands depend heavily on the brand value and exclusivity. Consistent discounting risk diluting that premium perception, which can further weaken the pricing power. So, while discount may suffer short term sales volume, they create a double pressure reduction gross margin in the near term and erosion of brand equity in the long term. Demand from tariff and risk of global markets and also integration of risk with Avica acquisition. Uh, if the deal doesn't go right, then that will be a problem for the company as well. Then the profit volatility in the Q4 in the financial year 2025 and the Q1 of 2026. it it's become question mark again whether they're going to do a good or not good. Also, the government policies on the EVs, especially the GST valuation or the GST charges on electric vehicles and motor vehicles, is still uncertain, and that could possibly disrupt the higher demand of electric vehicles. So, what is the bottom line? Tata Motors is at the crossroad. On one side, there is a massive growth potential with the demerger, leadership, EV push, and acquisitions. On the other side, earning volatility, JLR headwinds, and global risk make the near term bumpy. In the short term, expect volatility. In the medium to long term, if Tata Motors execute well, it could re-rate and deliver strong returns, but investors should watch quarterly results closely. Success depends on stabilizing JLR, cleanly executing the Iveco acquisition, and sustaining margin improvements. So, what the full picture on Tata Motors? If you found this breakdown useful, make sure to like this video, subscribe to Eagle Eye Stocks, and hit the bell icon so you don't miss the future updates. And I would love to hear from you. Do you think Tata Motors demerger will unlock value, or do you believe JLR headwinds will drag the stock down further? Drop your thoughts in the comments below. Thanks for watching, and until next time, stay sharp, stay invested.